forgot to check. It doesn't even matter. Oh. What's up, everybody? Mario, make sure everything's running okay. So I'm not talking to myself, please. You know how it goes with me. Thank you. Was it 4:13? Give it a couple minutes. Let everybody get their coffee, of course. How's everybody doing? Greetings and salutations. Stavro, good to see you. A nice little snapback in the market today, specifically tech. All right, let me mute this here. Reddit to announce earnings on July 30th. Is everybody ready for earnings season again? All right. All right, so I don't think we had a Thursday webinar last week, right? We had a holiday? I think so. Can't keep track. But I'll try to get everybody caught up to date here. Signal-wise, kind of what we've been seeing over the last couple of weeks. Hasn't been anything, any glaring changes. We've had, obviously, under the hood, specifically in semiconductor names and AI names. There's been some cooling off there, so that's good. Quite volatile, as you would expect. We'll talk about that. But interestingly enough, even with all that going on, there hasn't really been any significant changes out there yet. And, you know, we are in July. So market has a tendency of that happening in the heart of the summer. Things get quiet. We'll talk about that, obviously. Low correlation, really a lot of rotation back and forth. So again, pretty usual in the summer. The summer, you get saved when this type of action shows up. If you got a little speculative appetite out there, usually saves this type of action. You can kind of sidestep these type of market conditions. In other words, you get these smaller names, you get retail really pushing things around because of the light volume. We haven't really seen much of that at all. Actually, it's been quite the opposite of that. So that's what's made this a really tricky climate. Again, on both sides. I don't think tricky, bullish, or bearish. I think it's tricky for both. And, you know, we've been talking about that, obviously, the past few weeks. All right, so let's get cracking. Hope everybody's having a good week. Again, we had interesting. If you pull up ES, NQ, right? Just kind of your broader market, broader indexes. Since June, right? Kind of main highs in June. You had some real froth developing out there in certain pockets, um, heavily market related pockets like the semis and tech and big tech and stuff like that. But since the start of June, yeah, you couldn't draw up a healthier consolidation. All right. Like if you wanted to draw up literally with a pen, a marker, healthy digestion off pretty violent rip in the indexes, this is what it would look like. This is what it would look like. Right. And while that's been going on under the hood, as we like to say, the stuff that really kind of was the big risk out there, right? That had a lot of us concerned that the market could run into some problems. At the start of June, you had, a nice correction. Like you look at the semis, again, depending on what day you talk to people, I'm sure today everybody's bulled up again, right? Talking about how great the earnings are, blah, blah, blah. Buy the dips, keep buying the dips. But this is normal, guys. This is normal, and this is what makes it so difficult. You have a crowded trade, but unlike the speculative crowded trades that we've been used to of recent, right? The last kind of crowded trade you had similar to this was in Mag 7. All right, we talked about that. Just 7 names. Really, a lot of institutional positioning. That's all they wanted to buy for a while. And it got really crowded, right? NVIDIA being kind of the poster child of that group. So that's anything similar to what we've seen, to what we're facing today. The problem with what we're facing today, well, again, into the summer, was that it's more than just 7 names, right? And they become so crowded that now it brings on other risk, right? The market cap is growing by the day, right? They have a big weighting on the indexes, right? So that brings with it a lot of risk, a lot of more institutional positioning, retail positioning. If it gets nasty as far as the unwind is concerned, could lead to margin calls, right? Could lead to forced selling in other places, could lead to systematic selling from kind of these CTAs and vol control funds. But we haven't really seen any of that. Okay, it's been very mechanical. It's been very orderly. Now, again, if you're talking to somebody who bought the highs in these chip names, they don't think it's mechanical, right? They feel it's full-fledged nasty because some of these stocks, got decently hit off the highs, right? Some have held up better than others, but for the most part, I think like the semis and even the NTUM, even the South Korea market, right, which is EWY. I mean, that's basically the whole market's made up of 4 semis right now. Yesterday or the day before yesterday, you were actually in bear market territory. I think 20% off the highs, right, which is technically bear market territory. So it's been very mechanical, and that's been good as far as for the rest of the market. Again, if you're in these names, I'm sure you're feeling pain. Now, but that's what makes it really difficult for even just to go out and short these things, right? Because what happens is you get some selling, shorts come in thinking they're going to catch the big unwind. They get squeezed, right? Then you get bulls feeling good again. Whatever they puked up into the weakness, they put back on, right? Because they still want to be a part of these names. They're infatuated with these names. They chase, they get caught. So it's almost like bulls and bears feel the pain, even though, net, it's bearish, right? But very, very orderly, very orderly. So again, predicting how this was going to shake out was impossible. Like, I'm sure there are some of you out there and on social media who can claim to have predicted this exactly how it was going to play out, and it did. Maybe I would probably rebut that you got lucky, okay? But it's difficult. It's really difficult until you see it start to play out. And even then, it's really difficult to try to get a handle on how, how this is going to unwind, how this trade is going to unwind. And now we're kind of, even where we're at now, these things have cooled off. Okay, they've come in off the highs. Positioning has loosened up a little bit. We'll look at that in a second as far as that momentum basket that was getting a little too crazy. But there's certainly risk for a further unwind here, right? Now, that can come in a variety of ways, and that's what we've been talking about. If we're going into earnings season, there could be a catalyst there if kind of see some cracks in earnings, which nobody's expecting, right? Everyone's going into this quarter for legitimate reason, expecting good numbers from this whole entire crowd. Okay, that's not even a question right now. So if you did see, if the bar has been raised too high, right, because estimates have been ramping higher, if you do get a couple misses in the space, you're going to see some pain, right? And you're going to see that violent unwind. But if it kind of goes how it's been going, it's going to be a lot more random, right? And the reaction really to earnings and guidance and everything else, conference calls, is what everyone's going to be paying attention to. Okay. What's likely to happen is you're probably going to get some randomness, at least early on. Names that impress the street will see a positive reaction, at least initially, right? Some names that disappoint the street maybe weren't good enough. You'll see some selling. You may even see sell the news on some things that have rallied too much and stuff like that. So again, earnings are going to be interesting because it's going to dictate kind of how this goes now, right? And that's why, in my opinion, it's been orderly, because up till now, right, you have that fundamental backdrop, right? Again, it's nothing. There's nothing wrong with the fundamentals in this group at all. They are as bullish as you're going to see it, right? It doesn't get much better. And that's kind of where the problem lies, right? Everybody knows that. Everybody's positioned for it, okay? And that's where the risk lies. And again, a good example of that is NVIDIA, okay? Stock hasn't missed a beat fundamentally. They knocked the cover off the ball, quarter in, quarter out, every quarter like clockwork, right? But we've been talking about this NVIDIA for a long time now, right? Going back to the Mag 7 crowded trade, one of the most crowded name on the street. Anybody who had any intentions of owning NVIDIA already owned NVIDIA. Every institution had no choice. They had to own NVIDIA. They probably had max ownership in the name where they couldn't even add anymore, even if they wanted to. All right? And again, that's where the problem lies. All right? Buying just because of how bullish something has been for so long, buyers get exhausted. They have no more ammo to buy, all right? And you get a situation where, again, the fundamentals have been improving, right? The multiples continues to come down. It's not like NVIDIA is getting more expensive here. It's getting cheaper by the day. But the stock hasn't done a thing. If you bought NVIDIA last summer, you're break even on it right now, right? So that's the argument here, right? With this, and that's the problem that these semis face, is that, again, even if the fundamental backdrop is still bullish, okay, are they just so over-owned to the point where it doesn't matter, right? They may just consolidate through time. You may get a 2-quarter window where net they're just range bound, right? And that certainly can happen. Okay, that would be bullish for the rest of the market, obviously, in my opinion anyway, because I think that money, they're into that consolidation, money will continue to rotate into other parts of the market. Okay. Now, again, in the interim, there may be ups and downs and pullbacks and corrections in between as far as the market's concerned, but money can move from those names to other names, right? Even other tech AI beneficiaries. And that's kind of what we've seen with Mag 7. Mag 7 has been an underperformer for a while now, right? For a while. You've lit your money on fire in most of those names. Okay. So again, I think everybody understands that, and that's kind of the point we've been making here. It's got nothing is wrong with these names and their earnings. Their earnings are incredible. Like did you see the quarter out of these guys just yesterday? PENG. Again, you couldn't draw up a better quarter. You couldn't draw up a better quarter. Okay, but the stock has gone from 10 to 90. Right? How much more upside is left here before it goes into some consolidation? Right? Because a lot of this bullishness has already been factored in. Again, these are not stocks that have been chopping around and now all of a sudden they're announcing these blowout quarters. These things have been up literally in a straight line since we bottomed in April. Right? All of them. So a lot of this has been factored into these stocks, right? Maybe not all of it in some cases, but to try to figure out which ones it may be is a really difficult task, especially if the momentum is now against you in the space. Okay, so again, I have no idea, obviously, right? I said at the start, and I still say how this plays out, but again, I just think right now it's a tough trade regardless. Okay, so I don't want to spend too much time on this, the semis, because we've been talking about for a while, and there's no reason to really rack our brains there, in my opinion. We're not going to figure out anything new here. We really aren't. The bullish case is still the same, and to me, the bearish case is still the same. It's not going anywhere, no matter what happens. The only thing is, it can turn out worse if that bullish case of fundamentals starts to crack, right? Or their problem shows up. That's where the big risk is. Okay. So here's kind of like where we're at in the overall market, and we'll look at the stuff we usually look at here. While we've had healthy digestion, like I said, you couldn't draw it up any better. While we've had healthy digestion in the market, okay, the rotation that's happened under the hood. So while money has come out of the semis, they've been in correction, and some of the hotter AI pockets, they've rotated into financials, right? And this rotation trade, which again, I admit to you guys, I'm not embarrassed to admit it to anyone, I got spooked out of, right? The crowded tech trade and the risk of that trade unwinding in a violent way spooked me out of this rotation trade. All right, we talked about this. But again, it's been the bullish case, and if you were looking for that, you couldn't really ask for much more of it. If anything, the one missing link was kind of the commodity aspect of things. Some of the cyclicals didn't participate as much because of the dollar rally and stuff like that. But if you were looking for rotation to kind of buy you some time here while things were overheated in certain pockets, you got it, right? Financials, if you look at even the underbelly of financials, in a sense, KBE, KRE, that's where money's been going, right? You look at biotechs, I mean, they've been on fire. Some of these biotechs are insane. All right, biotechs have been ripping and roaring. Healthcare has been doing well. So you got that rotation, right? So again, the bullish scenario has certainly played out. And that's why you kind of have this healthy digestion overall in the markets. You kind of got sideways, range-bound trading in the S&P 500 and the NASDAQ, right? While like the equal weight has outperformed, or the Dow, which we talked about, right, has outperformed. All right, so again, that rotation's been taken hold. The problem we face now as we get into earnings season is because of this rotation, no good has come out of kind of this digestion in semis as far as on a sentiment or positioning basis. That makes sense? You understand what I'm saying? Because there have been enough places to hide, right, and for money to move around, even as we've gone sideways since the start of June, sentiment, positioning really hasn't budged much, right? So a few of the things that were kind of getting us a little nervous at the start of the summer, right, even with the digestion in the market, hasn't really gone away. It comes and goes in spades, right? There's improvement for a couple of days, then you get a snapback, rip roaring rally in the semis, and it's back again. But net, it hasn't alleviated that pain. Okay, and that's kind of what we face now. Is you go into earnings season, you have some of these spots of rotation that are a bit heated, right? You look at like kind of biotech, right? This is a little stretched now here. The financials certainly can go higher, right? But they kind of been pushing higher into earnings. So you face that as an issue, right? Are players bullish, are bulled up enough to chase these areas even higher? Right? Just because they chase semis doesn't mean they're going to chase financials and chase biotech or healthcare. We don't want that anyway, right? Because that creates a bigger problem. And that's kind of what we're seeing here, okay? And again, it's typical in summer months. Where am I? Let me get here. Okay, and you're hearing this from a lot of different camps. Goldman had a big note on correlation. They're starting for clients. They're coming up with plans to hedge for clients, right, against this correlation risk that's out there. And for basically, for those of you who may not be familiar, we've looked at this for ages now on this webinar, going back years. But what you're hearing about it more now is you're down to levels where there's been legit risk to the market, right? We haven't seen net across the board in correlation. We haven't seen low levels like this going back. The last time we seen it was kind of the Volmageddon, where you had an outsized move in vol and VIX for, there really wasn't any catalyst. It was just based off, some of these dynamics, right? The positioning in vol and correlation being so low. So that's kind of where we're at right now, right? You got like 1 month implied short-term implied correlation down to levels. The last time we seen that was going back to here, 2024, no coincidence, in the summer again, right? And you just had this drift. There, the market ignored it and just continued higher, and correlation continued to drip all the way down to a 2, if I remember correctly. I think we're at 4 now, okay? And then eventually, you got a pop in vol and you got a drawdown in equities, and you could see how outsized the move was for even what's just a normal pullback, all right, because of how offsides things have become. And that's the main risk here. That's the main risk. Again, while if you just look at it on face value, the market has digested perfectly. Again, I can't stress it enough. Like you can't draw up a healthier digestion than what we've seen. You really can't. But the problem is you still have the issues like this. And the problem with issues like this is they get ignored. You get bears who try to short and it doesn't work out immediately. They get run over and then they give up, right? Bulls were concerned about it, but they see the markets ignoring it. Days go by, week go by, then they completely ignore it, right? So you get this lackadaisical complacency that just continues to build, and then it just shows up like that. Shows up like that, and you get the shock, right? You get this shock. And again, I don't know if it ends up a Volmageddon type situation. I don't even remember the cause of Volmageddon. The news that cracked it. I don't even know if there was news, but you have the ingredients for that. What could also very likely happen, because you're in the summer months, you can just linger down here, right? We can linger down here through July, possibly into August. Again, that doesn't make this go away, right? That's the main issue. It doesn't go away. That risk is still there. Right? So you still have to prepare for that risk, even if it takes a bit longer to play out. All right? So that's the biggest problem. Now, I think what makes it a little bit easier, again, depending on what type of player you are in this game, but if you are cautious because of it, I think it makes it easier for us that really nothing's really going anywhere anyway. It's not like things are ripping and roaring and you got FOMO out the ass because you're missing opportunities. If you got FOMO in this tape, I mean, let's be honest, you're a real degenerate. There's nothing different than that. You're just a degenerate. It's not like AI stocks have broken out and are melting up 1999-esque or anything like that. You got a market at the index level that hasn't done squat in a month and a half. And underneath the hood, depending how fortunate you have been, you either got tripped up or seen a couple winners. Net, they probably usually even out, right? In this tape, I don't know about you guys, but for me, some winners, some losers, some scratches. And when it's all said and done, I'm like, what the fuck did I waste my time for? That's usually in these low correlation tapes how it plays out for me. That doesn't mean the stock I'm in right now can't turn out to be a winner. But usually when it's all said and done and I look back, trading in this climate, I'm not missing anything. All right? So again, that may not be how most of you look at this. I get it, especially if you're younger, especially if you're more aggressive and you're slinging 0 DTE and weeklies all day long and can't have enough action. I get it. But, for the most part, there's really not a ton of opportunity out there. Okay? So I think that's the good thing, I think, from the environment that we're facing. Because again, if you look at just a comparison, where am I here? If you look at July of 2024, and that's here, we continued to rip, right? So the market continued to strengthen and make new highs. Now you can understand, you can easily have FOMO in that type of tape, right? Because you're watching shit just go higher every day. Now, even in that tape, because correlation's so low, there's not healthy participation, right? Again, that's the definition of low correlation. Not many things are correlated to the indexes. The market's up, the indexes are higher, but 2 out of the 4 stocks you own are down, even with the market higher. That's the climate. So until it's hard to get, I don't know about, it's hard for me to get really constructive even with digestion and even with some of the good things we're seeing, until we get this resolved, right? We like to call this booby trap territory for the simple reason that, it's very easy to kind of lose track of it, right? Ignore it, forget about it, and you get stuck, right? You get caught in that booby trap time and time again. Is this the time where this lingers for the rest of July and August? Certainly possible, but anybody I talk to is not going to feel any better with correlation at low extremes, possibly the lowest ever, heading into September. Right? I don't know too many people who are going to feel good about that situation. Right? Even in the most bullish case, if things look as bullish as possible, I get somewhat cautious going into September, right? Things can look perfect and something has a habit of showing up in September, let alone if you're heading into September with these type of things, right? So again, that's kind of the thorn in my side right now. The main thorn is this, because there has been some good that's come out of this digestion. I'll give you an example. Retail options buying, again, got too frenzy-like, right? Because of these $400, $500, $600 semi-chip names, AI names, retail has no choice but to buy calls in these names. All right, they're not buying equity in an $800, $900 stock. It's not happening. They're buying calls, more likely weekly or front month calls. So you got to a heated extreme there, as far as call buying in general, because of these pricey names. We've looked at that a couple of times, but because of this correction in that space, it's cooled off. It's cooled off. Let me show you. I have an updated one here somewhere. Yep, here. All right, so this is something we like to look at from DB, posted every week. And here was the extreme. So this is, again, net opening bullish positions in the option market. This was that blow off top in a lot of the speculative stuff, right? Oklo, quantum names last October. Here is the high we just recently hit. And because of what we've seen over the last few weeks in a lot of these crowded names, you come in a decent amount. All right, here's the breakdown. And you can see retail is the blue, but look at even the large traders. Because, guys, again, these names, we see it in the flow every day, right? There's not a lot of trading in the equity world in these names. It's all options, right? It's all options. And, let me touch on this because I'm going to forget, because I think it's exactly where we are now. And for those of you in the steam room, you can understand kind of where I'm at in the flow, right? And why, some of these outlandish size orders really just don't impress me that much in a Micron or a SanDisk. I think right now, everybody, especially on the institutional side, right, the professional side, everybody who wanted to be long in Micron is already long, has been long for likely a while, okay? And what you're seeing on a day-to-day basis, in my opinion, is not directional betting anymore in these names. It's hedging, right? It's hedging. So when these names, and you see it in the flow, when these names have bullish momentum and they're trading higher, right? You see call buying, mostly, okay? Again, that's likely because shorts, right, who have been shorting are hedging. They're getting squeezed, right? Anybody who's trying to short a Micron knows exactly what I'm talking about, okay? And again, if you're shorting equity, you're nuts. But if players are short equity, what do you think? They're just going to sit there and wait and hope and pray it collapses one day? No, they're going to protect their ass when that trade's going against them by sweeping calls. And sweeping $2, $3, $4 million in calls in Micron to protect the short is peanuts, right? When you think of the type of positioning that goes into these names. So, in my opinion, that's what we're seeing in these names flow-wise on a day-to-day basis. To sift out what, maybe this one call buyer is a clean directional bet. Yeah, you're asking a lot, right? It's okay, buddy. It's the lawnmower guy again. You know what I mean? It's a lot to expect to find or to hope that one bet is clean activity. Now, again, don't get me wrong. If, like recently here, you had a pullback in these names, and especially on an intraday basis, you see some call activity come into weakness, the stock is down. Not necessarily up, down, and you see some call activity, for a trade, you want to, look to try to take advantage of that. That's a different story, right? Because again, you're playing momentum there. Maybe shorts are getting nervous and they're starting to cover, right? They're starting to hedge by sweeping calls, and you can get in the middle of that for a trade, okay? So I'm not talking about that. I'm talking about relying that on some July or August sweep for a couple million is a clean directional bet at this point in the name. Is it possible it is? Sure, it's possible. But there's a higher possibility it's hedging, stock replacement, rolling, or any of those other things. All right? So I think, again, to get an understanding of what we're dealing with in the flow, this is what we're seeing in the flow on a day-to-day basis. The flow really has been, because what we're seeing all the action in these names, and it's hedging activity every day. Every day. All right? A couple of days ago, we were seeing size put buying as these things started to lose momentum. All right? Huge put buying. All right? Then you see size call. There are days you see all in one tape. Very common. I'll pull up, and honestly, every day you could probably see it. You pull up the overall flow in Micron, right? Let's say you see a Micron $4 million sweep today, just hypothetically. You pull up the overall flow in Micron, if you bother to even look, there's million of dollars in put buying in the name. There's calls closing in the name. There's call sellers writing, collecting premium on the equity that they own in the name, right? So you got opening call selling. You even got opening put selling. You got everything you can possibly imagine in these names right now. And that's what we're dealing with the flow right now, especially as we're going into earnings season here, right? Just normally, as you get into earnings season, hedging, right? All this stuff increases no matter what is going on. Right? This is magnified even that much more because of how crowded they have been, how active they have been. All right, so that's a lot of what we're seeing in the flow too, which again is another problem, right? If they were finding new names in the flow, maybe you want to take a little more risk even with correlation this low, right? Maybe it's worth it to take some risk. Well, sweepers are still firing at things. Right? They're still finding new names, but that's not happening. That's not happening. All right. So here's the options metrics sentiment here. You can see here. You can see here too. Look, the green line, mega cap growth in tech. Right. I think that's the last time we looked at it on this Thursday webinar. It was all the way up here. So look where it's come down. All right. So you had a nice shakeout of extreme in the options world. And guys, see, if you remember, I think it might have been in May, okay, when I wasn't as cautious as I was. If those of you pay attention and remember, you can recall that we were talking about, all right, the semis are getting crowded, but there's no reason to really worry because we can see rotation, and that rotation should be enough to hold up the market. And not only that, we could find opportunities there. That kind of was my thesis for a good couple months, right? Even as the semis were going parabolic. Why it changed as we were getting into the summer was that you were getting to even more of an extreme, right? You were getting to, now you started to see these extremes get to levels that we weren't dealing with. And that was kind of the risk, right? That's what kind of changed my tune. So initially, what I was getting at is, the point I'm making is, if it was just this that we were worried about, which it was, this problem's gone. This digestion in the market solved this issue. The problem is, this is not the only issue anymore, right? It was, but because things remain bullish in that space, other problems arise. Okay, so that's what we got there. A Bova Bull Bear indicator, Hartnett. I don't know who follows this indicator. This is kind of his revamped version. Is deep into sell territory. Again, the Bova Bull Bear indicator, especially the old one, he's fine-tuned this one, supposedly more signals and even more accurate. But when you back test it, again, performance is not great when this indicator is in sell territory. All right. I think that would be the biggest takeaway from it, is that upside becomes a lot more difficult. Doesn't mean the market's going to crash instantly, right? Because just like anything else, it can get deeper into sell territory, right? As the market's just chopping around. But this is picking up on some of the positioning risk that we've been talking about. One of them is this here, right? That hasn't gone away. So while options have gone away, flows, and which you guys reminded me that you had the Trump accounts. Remember, we were talking about July, you have Trump accounts, and probably the fund flows will still be robust. And that's kind of playing out. These fund flows have been ridiculous. But you're getting, they're just getting even larger now. Right? These fund flows just keep growing and growing and growing. And while they grow, it likely keeps a bid in the market without some major catalyst. But usually when they start to slow, right, like anything else, when it exhausts itself, you open the window for a correction. Right? And June was the second largest month of net ETF flows in Goldman's data set. All right, so just big time money coming into these things. This is basically showing from like NAAIM, which is professional advisor exposure, kind of the point I was talking about earlier, that basically what you have right now in the professional world is their position bullish. Okay, it may not be to an extreme across the board, right? So they're not all in, full-fledged in everything on the professional side, the fund side, institutional side, but they're long, right? They're pretty long, and they're just sitting, right? They're just sitting long, and they're hedging around that, and that's kind of what you got going around now. Where are they hedging? Probably in the option market, because we're not seeing it in VIX, right? Even VIX positioning is getting a little heated as well. So again, it could pose a problem if things get a little slippery, right? And this rotation kind of stops. We talked about this in the steam room. Up to this point, it's been rotation. No money has come out of this market, right? I'm sure most of you would agree with that. Even as money has come out of semis, come out of some tech names, hyperscalers, Mag 7, it's gone elsewhere. There hasn't been money coming out of this market. All right? That's the big thing we haven't seen yet. It's just constant rotation, money being moved around. Let me see. Yeah, VVIX. Yeah, we try to look for some early clues, right? We like to look at like credit indicators and volatility, get maybe early signs that the market is starting to show some cracks, even as we're consolidating. We haven't seen anything in VVIX. Any little divergence gets wiped out immediately. That's bullish. Okay. Here you can see this is an hourly that I like to look at. So kind of short term intraday. But you can see pretty much in sync, right? If any very minor divergences, they get worked out rather quickly. Okay. Where we're starting to see, again, a little bit of crack, especially if it continues here, is finally on the credit indicator we like to look at. Okay. It's been mostly rotation. Okay. So you see two proxies for two different type of credit spreads, high yield and IG corporate, right? The pink and blue line. And you see them kind of crisscross back and forth. That's basically the rotation we're kind of seeing, right? When IG spreads are performing well, that's usually the underbelly, smaller cap names have a tendency to do better. When they underperform, usually it's the larger cap names that are doing better. The different wrinkles. So as we gone into June, and if you guys remember us looking at this and talking about it, it's just been signaling range bound, right? Rotation, range bound. That's basically what the takeaway from this has been as we gone into June. And lo and behold, that's what we got with this market, right? Kind of range bound trade. You could see a little bit of a different wrinkle starting up here. Okay. IG spreads are starting to diverge in a bearish way. All right, that's pretty obvious here. High yield hasn't. Okay. Today is the first day we kind of see credit spreads. They didn't confirm today's risk on move in equities. Okay. So that's what the takeaway is from this. All right. Today's rally in equities was not confirmed by this indicator. Now, if we start to see this deteriorate, right? So if we start to see this blue line start to roll over, similar to this pink line, as the indexes are holding up, that would be a negative and early caution signal that potentially this is more than just sideways digestion, and now we may start to see some cracks. All right. You guys remember, again, if you were around before the Iran war, little pullback here, we started to see that divergence stir up. If you remember, you can't really make it out here. So that's what we're kind of looking for here. Any early signs that, again, this digestion is possibly going to roll over to the downside. Okay. If credit spreads were firming up and breaking out here, that would be bullish. Now, can it happen? Anything can happen. There's really, the backdrop is not there for it, right? Right now, that can change. You don't have, you have the Fed right now, hikes being priced in, not really an accommodative Fed. You don't have any QE or any stimulus or anything like that going on that we're aware of that would cause this. Right? Spreads are already near all-time lows. Credit spreads. So for them to get even more bullish from here, you're likely going to need some sort of stimulus come from somewhere. Likely. Okay. So that's why we're keeping a close eye on any signs that this may be telling us the market's ready for a little more weakness than what we've been seeing, right? Because right now, every time any little pullback, they buy it. Any little pullback, right? And even the downside, the more rotation than net selling, right? Even the down days in the market, we can point out money rotating into different areas. Right? The indexes are down because the semis are down and tech is down, and they make a big part of the index. but RSP, the equal weight is up, right? Healthcare, pharmaceuticals, financials, they're all green today, right? We've seen that many times. So if credit spreads start to deteriorate, that would be a sign that some of those risk-on sectors may not see the rotation anymore. Okay? So that would be, again, I wouldn't call this a glaring warning sign yet. Today was the first day we're kind of seeing both of these things spit on the rally. But let's see. Let's see. Because there really hasn't been too many warning signals anywhere. This is from BOVA. Hedge fund clients. Hedge funds been doing some buying. The institutions, they're the ones dumping. And they're for the type of names that most of us in the steam room like, the guys who are vocal in the steam room, you know who you are, right? Kind of underbelly growth name, new leader type names. You're not going to see that type of flow with this. That's the flow we're picking up on. We're picking up on institutions building an interest in new names. So when you see this, you're usually not going to see that. All right. Usually the flow is concentrated in the active names, the names everybody's talking about, the names everybody's trading, not really any new leader type names. What else? Anything else that's interesting here? Here's credit default swaps. Again, here's a perfect example, right? Credit default swaps, just lingering down here. No divergence of any note, nothing like that yet. Okay, so no early signs there. Anything else? Oh, here, we talked about this. Even this cooled off recently. So you had, because of the rotation, right, the bullish rotation, even though the market was chop, right, even though the market's a range-bound tape, you had new highs. So the amount of names making new highs reach an extreme, where usually you run into a little resistance, right? It's nothing huge all the time. It's overheated in a sense. So it was just weird that in this type of tape we see that, but we did, and it's cooled off a little bit here. You see it kind of over here before we topped out a little bit. Again, nothing crazy. Here, this was late 2024 before the pullback in 2025. Right? This is obviously what you see at lows when you get puts expanding drastically. Puts, new lows expanding drastically. That's what the red line is. All right. So when you see a spike in new lows, you'll see a spike in the red line. A spike in new highs, the blue line. All right. So the contrarian look is kind of looking on the other side of that. Let me see. Oh, here. This was the other thing I wanted to know. So if you remember, this is kind of where we left off a couple weeks ago, right? Even though the semis were somewhat cooling off, the momentum trade was somewhat cooling off. Exposure-wise, no money was coming out of it, so nobody was getting shaken out. They started to get a little shaken out here, all right? So you're starting to see a little wiggle. This is probably a better look down here, so you could see. Okay, so you can see how, you got up to almost 70%, which is crowded. All right, so everybody in the same boat in this trade. And even as they continued, to show strength in a sense, it just chopped around here, just showing you that basically everybody who wanted to get long got long. They're done. There's no more buying left to be had in this bucket. All right. Again, just reaffirming how extremely crowded the trade was. And then they cooled off and they really didn't come in, but now we started to see it come in a little bit here. Okay. Does it need to go to zero? No. Does it go to zero in a straight line all the time? No. Again, that's the difficult part. That's the difficult part. My opinion, and if you remember, I said the same thing about the speculative names last October. Okay. If you are a bull in these names, right, and you remain a bull in these names, regardless whether you own them cheaper and you're holding them, I can't blame you. I probably would do the same thing. Or if you're looking for opportunities in these names again, you need digestion. Like, you need digestion. That's ultimately what you need. You need some digestion, and you need it through time, right? Unless it's a painful correction. The more painful the correction is, the quicker, right? Because it can unwind the trade really quickly. And it's amazing how quick things can change, right? Bulls can turn bearish really quick when they're in pain. You guys know that. Okay. So one or the other. There's either got to be enough pain, or it's just through time. Right? They stay kind of, again, Nvidia is an example of it. I think Nvidia is as bullish case as you're going to get. Right? Where nothing went wrong in the name. It's all roses, but it was just so crowded that it has to digest. And it did it in sideways fashion. All right. So that's where, in my opinion, and I'm not a semi hater. Those of you know me, they're my favorite group. Chips, there's nothing better than chip stocks. All right. When you're on risk on, there's nothing better in the world than chip stocks running. All right. They're the best growth stocks on the board. But they're just overowned right now. All right. So I think if you're bullish, you trade them. And what I mean by that is you look for opportunities off of weakness and sell the rips. And I'll be the first to admit it. That's easier said than done. I can't do it, right? With any efficiency. Obviously I can physically do it, but I'm saying that, sometimes you're a little too early buying them and you're underwater, and if you're trying to use stop losses, you're getting clipped, right? Sometimes you're too late to pull the trigger and they run away from you because they bounce so quickly. Again, it's a tough trade. And you can't, for overnight trades, you can't play the equity. You're not playing equity in these names. They're $1 gazillion a share. So you're trading options. The premium is all junked up, especially now going into earnings, right? So most of you playing these names are paying more in premium than price of stocks that I play. That's how crazy it is. So it's a tough game. You got to kind of hold your nose, buy off these little pullbacks, and look for a rip to sell into. It's not easy. It might be a little easier, but the reward side of the equation gets chopped away a lot intraday. And I think a lot of that's going on, right? Nobody's even trading the names, even on an intraday basis anymore. They're trading these levered ETFs. That's a whole other, I'm not even going to talk about that, with the effect that's having on the market and these up and down day-to-day gyrations. That's all coming from these levered ETFs, right? So like me, I played Nvidia yesterday off the flow. The stock was down and they just kept whistling in, right? Call sweepers in 0 DTE and weeklies, one after the other. So I said, maybe something I can get in the middle of for a trade. I didn't buy Nvidia, right? I played and I've been active in this name actually more than I used to be ever. NVDL for intraday. $30 stock, and the volatility is there when it's moving, the flow, you get some action. I saw AMD kind of active today, right? You got the AMDLs, right? Which is, again, a cheaper version of these stocks that you can possibly day trade more effectively. Like you see, I used to trade Soxel. You guys know Soxel. Not only did I used to trade Soxel, I bought Soxel and for a swing trade with the IWM. I just sold it before, a lot earlier than I sold IWM, unfortunately. But I bought Soxel coming out of the tariff correction, the Liberation Day. Right? But now, when I was playing Soxel, this thing was $20. All right, so it's like the NVDL. $20 piece of paper, you can get moves on intraday. It's worth it. This thing, it was $300 now. What the hell am I going to do with this thing? Right? So, now it's too volatile. So, again, not really my lane. But yeah, these are the things a lot of players are looking to take advantage of, especially intraday, right? Where they can control their risk a lot more effectively. They're also using this for hedging purposes as well, as you guys know, right? If they own the semis and the trade starts to go against them, they're buying Soxel puts, right? To hedge that trade. There's a lot of, it's not really pair trading, but there's a lot of pair trading out there because of the rotation, because of the low correlation, high dispersion type of climate. Nobody's naked anything right now, right? Any new money, any new risk, nobody's just going and buying this, right? So if they're buying XYZ, they're short ABC. You understand? They're getting long something and shorting something else to kind of offset it a bit. And that's the type of market we're in right now. That's the type of market we're in right now. Okay. So I don't know how I got into that, but because I was talking about this. So they come in a little bit. Again, enough to buy? No. Right? Enough to say the correction's done? No way. No way. Yeah. I think there's still more work to be done that's needed to be done in the semis. Okay. Certainly possible that off of earnings, they rip them to new highs. Certainly possible. But again, there's work left to be done. And if it gets left undone, it still needs to be taken care of. All right. So you can get ripped to new highs, but likely that ends up being short-lived. And you just see selling show up a lot sooner than you normally would. Anything else? Let me see. Anything else before I start? I'll talk to you guys about something else. Some of the survey sentiments, fine. All right. You're not, again, nobody's all that bullish. You got more bears than bulls in the survey sentiment. So this is kind of like mom and pop investors, longer term, right? They're not feeling too great. So nothing really there. Again, guys, for me, this is kind of it, right? Like it's not just this, but this kind of puts a bow on what I'm concerned about here. Well, the risk is the better way to put it, right? I think the risk is a Volmageddon type. It doesn't have to be that dramatic, but flashy crash type event to show up. Could be short-lived. Again, I'm not saying it's the start of a big bear market. All right? I just think it's a risk out there that needs to be dealt with. And until I see it, this problem alleviated, it's hard for me to get too constructive. It's hard for me to get too constructive. But again, that's me, right? That's me. I mean, I take it, especially now at the point I am in my life career, I overdo it sometimes. I like when I'm a filler kill type guy anyhow, for the most part. When I'm a crackhead, I'm a real crackhead. And when I'm not a crackhead, I go clean sober type thing. You know what I mean? But I like when I get cautious, like even though I still can play a little bit and it's not really going to do much harm, right? I just end up getting overly cautious, right? Because I feel like it's not even worth it. It's not even worth it. That's kind of how I look at it. So what I've solely been doing, as you guys know, I've been telling you, I don't lie to you. I've solely been day trading. Haven't really held anything overnight, nothing overnight. And that's kind of what I'm waiting on. That's kind of what I'm waiting on. Yeah, I don't really, again, SPY levels. I'm not a technician. I don't look at that stuff really. I don't look at any of that stuff. I'm not saying, where is it? I'm not saying it's good or bad. It's just I pay attention to enough stuff. I don't need to cloud my mind too much. But there's, again, the levels, I don't have any levels or anything like that. Like, again, you have 50-day moving averages, 200-day moving averages where markets find support and stuff like that. But I just think it's watch and see and evaluate, because here's the thing, right? Let's say you get something to set off some selling, right? And it, that bearish tape lingers for a little bit. Then you got to deal with the systematic flows that end up flipping, right? You start cracking levels to the downside. You got some room. I think the CTA levels are down here in this neck of the woods. So that's why we're not even talking about them right now. But, if that kind of unwind takes you below those levels, then you got that to deal with. So I almost approach it as plan as you go type thing, right? Instead of saying, oh, I got to see a pullback to 71.50. Until then, I'm not buying a thing. And I don't really have anything to base that off of. Simply put, the risk, the stuff we've been looking at here, right? Even the stuff that already has been taken care of, like the options sentiment and positioning, right? These risks need to be dealt with. And once they're dealt with and we see some half decent flow show up, I'm ready to party. I'm ready to go. I get excited. I get excited. But this is kind of, again, my seatbelt that has kept me out of big trouble, I guess is a better way to put it, throughout my career. All right. Avoid getting caught in some of these calamities. There's been early warning signals that have been able to keep me out of Dodge. And, this is the stuff I'm showing you guys. Yeah, and see, again, if we were seeing, the price action was super bullish in the market, it's one thing. If we were seeing the flow, sweepers bombing new names, maybe you can come up with an excuse, let's take a little risk. We're not seeing any of that, Sahil. We're not seeing any of that. All right, so it's kind of, everything is kind of telling us to just take it easy. Chill out. All right. Don't put on too much risk. If you have too much, look to protect some of it. All right. And just chill out and wait for the opportunity. I know it's difficult. We all get antsy. But, we're just, as of right now, it could change. We're not really missing anything. When you're in front of the screen every day like we are, and you see these big snapback rallies and these big moves, you get antsy. You get antsy. But, look at, look, right? Like, again, the semis and these type of names, that's where the movement's been today, right? Big update, nice update. This is what's been going on here. You get a little bit of a pullback, boom, snapback. Right? Fade that, snapback. Fade that, snapback. If you could try to trade this and make some money, that's what we're talking about, right? Try to, if you're looking to play this, buy off weakness and sell the rip. But these are trades. There's no reason to go crazy. There's no reason to go cuckoo doing that. This is not. where you want to try to pick up the money, right? So we're kind of seeing that all over right now. We're kind of seeing that all over the place. And as we get into earnings, you got that much more risk, right? Again, next week, I think it's next week, you're going to get ASML and TSM. Okay, that gets the ball rolling for the whole complex, the whole group. Right in the middle of the night, they report ASML and TSM. You got the big chip name in Europe, and you got the big chip name out of Taiwan's TSM, which is a stud. Right, this might arguably could be the best company on the board in the space, TSM. So they get the ball rolling. If you get a strong positive or negative reaction from a Taiwan semi, it likely is going to set the tone for the next couple of weeks as the other ones get ready to report. So it's always interesting to see kind of the reaction from these names. Because this is right smack in the middle of all of them. This Taiwan semi, this is a behemoth. There's a behemoth. And again, I like the rotation trade. You guys know that. I think the rotation trade, I still like it. I think there could be some digestion there too, through earnings, because there's been some decent rallies. But we'll see. Let me show you guys again the type of action we've been seeing, and then I forgot one. I forgot. Hold on. Here's the other thing, the change. Where's So the other thing that we kind of haven't seen up until recently, Sharpies. Right? So commercial hedgers in the futures market have been basically net long of equity index futures for a while, for a lengthy period of time. And the reason why they have is because hedge funds, large speculators, whatever label you want to put on them, have been short equity index futures, right? Especially like the Russell, they were short to an extreme. You remember we talked about that and stuff like that. So what changed a couple of weeks ago, you had this, all right? And then basically what happened there was Sharpies went from, we call them Sharpies. Sharpies, sharp money, smart money. They went from net long equity index futures as a whole to net short. Okay. So, that itself is not necessarily alarming. All right. Because again, that's normal for the market where equities trade right now. They should be hedged. Okay. But it tells you about positioning. So what's happened in the futures market, right? S&P 500 futures, stuff like that. Large speculators have been covering their short position quite aggressively. Okay. And small speculators are already long in a pretty meaningful way. So this is a good temperature check on positioning in the futures market in a simple way. All right. And what it's telling you is there's some concern about offside positioning in the futures market. Okay. Again, that hasn't been a problem in like forever. And we just saw that change recently here. Okay. Again, what you don't necessarily want to see, or if you want to pull back, you would want to see, but you don't want to see the market kind of linger here or even strengthen and Sharpies add to their hedges, right? So kind of what they did here, right? They got kind of maxed hedged here. You had a little bit of a wiggle in the market. They covered a little bit, and then they got max hedged again into the highs, and then the market cracked. All right. So when, again, positioning terms more than price action terms, hedgers want to be the most hedged when positioning is the most offsides. That's their goal. Solely based on positioning in the futures market. Okay. And at the same time, by the way, that they are or have started to hedge in equity futures, they are they long VIX or they unraveled VIX? I don't remember now. 7.7. So this is VIX? Oh no, that's the dollar. That didn't look right. That's what I was saying. Hold on. Is this the VIX? No. That's the S&P 500 by itself. Where's the VIX? Wait a second. Why is it duplicates? They're long VIX futures. I can't find it here. I don't know why. Did I not post it this week? I thought I did. See, I got to figure out a better way to search this. Here it is. Thank you. Here's VIX. Okay, so this is Sharpies and VIX futures, commercial hedgers in VIX futures, net positioning. They're always, again, they're hedgers by definition. So they're almost always long VIX. When they're short VIX, that's a great topping signal for VIX and a bottom signal for the market usually when they flip short VIX. Like see this VIX pop, they flip short, that's usually the end of it. Okay, so again, by definition, they're hedgers. They always have some VIX exposure on to hedge. But you can see they started into this VIX weakness, they've started adding exposure here. Wait, is this updated? Yeah, this is updated, right? What's the month on this? 6/5. That's a month ago. Anyway, that's a little old, that chart. I don't know why that's happening. All right, because I know a lot of you ask about Sharpies. So that's what's going on with Sharpies. They've started hedging as well. So just, another little wrinkle of concern to add to the mix. All right, very quickly, and I'll let you guys run. Again, I don't like to, usually every day in the Steam Room, I'll post a top bet list. That's the top action for that day, the top bets for that day. As we get into earnings season, because of the uptick in hedging and stock replacement and all that, I don't like to post top bets, right? Because they're not clean. So again, take these with a grain of salt. Most of them catch earnings. Even if they don't, there's probably a few companies in the group who report, so it could be a hedge against that. But here's some of the top action today. CRC, that's a energy name. Some buying with time there. July, a year out. Deep in the money buying, which is pretty interesting. CRC. I'm not the biggest fan of energy stocks. This is not energy, is it? Wait a second. Yes, it is. Why do they make me nuts? Here it is. So you had a pullback as, I don't know what's going on in Iran anymore these days, but you had the ceasefire. So you had a pullback in the energy names. A little bit of a bounce here as Trump has started bombing again, I think. But they're buying a year out, deep in the money. So if you like energy longer term, you have an idea here. Decent buying, okay? Again, energy is tricky because you're making a bet on crude, whether you like it or not, right? You're betting on crude. So that's what I don't like about energy flow, energy names. It's a bet on crude, okay? But here's an idea. If you're looking for a name, looks pretty interesting, decent spot. And they're buying a year out. What else did we see today? HPE, this name has been littered with buying. Good looking buying too. I played this name a few times. Of course, when I played it, this thing couldn't move. It was so slow, and then just went bananas with everything else after I was out of it. But this name caught really good looking action. Most of you in the Steam Room are aware of the action in this name. Okay. You had a pullback here with the rest of the names in that complex. Big bounce today. Okay. They don't report until September. But again, it's going to be affected by all the other names reporting. TSM and ASML, the first. All right. But it caught some sweeper activity today. This was the best looking of the bunch. Nothing's huge. About average size for this name. September 60s. Not a bad looking bet. BBIO, biotech, man. I'll be honest with you. I did not like when I seen the move in some of these biotechs. It kind of caught me by surprise. I knew they were moving. I didn't know they were moving as much as they've had. Yeah, it's not really a group I follow too closely. But these names have been on fire. So this BBIO used to be one of our favorite in the Steam Room a year or two ago. Used to catch some nice action. And into strength today, you had a buyer. Where'd it go? Jan 120s. So $30 out of the money. Opening bet, almost 300 grand. Again, a name doesn't catch a whole lot of sweeper activity. Another biotech that caught action yesterday or the day before yesterday, MDGL. Another decent looking name. Baker Brothers special. Baker Brothers. Those of you familiar with the Baker Brothers in these biotech names. Again, be careful. I don't know when FDA panels are coming up or anything like that, you know. So you kind of have to approach these things. You put in what you're willing to lose in these calls, right? Because news can show up like that. But I know many of you like biotechs. Okay, there's been some action there. Lilly has caught a lot of flows. Some of the big biotechs, LLY has been really strong. Some nice action in that name. Again, has had quite the run here. What else we got here? Here's a semi for you semi fans. You guys know this name. I got a buddy of mine who has his whole book of clients in this name for years now. Loves it. LSCC. Again, you know, the numbers growth has been stellar. All right, but more than likely is going to trade with the rest of the semis, at least initially. Right? What we may see, similar to Mag 7, you may start to see this correlation break up. Very possible. Right? So you'll see some semis doing better than others, some stuck in a range, others rolling over. I think that unless this really unwinds and deteriorates, right? And if there's forced selling in the semis, unless that happens and it leads to a correction in the market, I think that's what you're going to see in this kind of low correlation environment. You're going to start to see these things march to the beat of their own drum. The problem is, like even a name like this, right? They had a quarter yesterday. I don't know if you guys seen the numbers. Insanity. Like the growth in this name is insane. All right? Earnings up double, revenue up 60%, raising guidance, anything you could ask for. But I still think like it's gonna find trouble up here because of this move, right? So picture perfect quarter, best case scenario, had a big pop, but it might run into selling here. You know, so even the names that kind of tried to break out, you may see them getting yanked back down because of further unwind in that crowded trade. All right, but maybe you're looking to build a position off pullbacks or even trade off pullbacks, right? And stuff like that. That's kind of probably the better way to approach it. So LSCC, good looking semi, caught a sweep there. This thing doesn't catch huge action, so this is kind of like an average sweep in that name. RKT, you guys know this name. This is basically a rates play. That's what it comes down to. If yields go higher, it's almost like algos are instantly sell the stock. If yields come in, stock catches a bid. All right, they got earnings coming up the end of the month, but it's more likely a yields play. Okay, so this could be just earnings positioning. This was the active line. A lot of action on this line. August 7th, 15 calls. Okay, decent looking sweeps, but they catch earnings. And bros, if you guys remember, we talked about bros on this webinar about a month ago. T, if you're out there, I haven't seen her, but she'll probably watch it on recording. She traded this name well. She bought it at the perfect spot of some action, and I think sold it into the rip. But off this little pullback here, he had a buyer show up. September 72 and a half. Okay, it does catch earnings August 5th. All right. So again, take all these with a grain of salt because we're in earnings season. But those of you looking for some ideas, even just tactically trading and stuff like that, here are a few names. Yeah, right. It does. It's funny you mentioned that. Looks similar to Meta. Meta actually, bros broke out of this downtrend. Meta didn't even do that yet. I don't think. Let's see. Nope. All right. So like, and these hyperscalers, I really, what's funny? You talk about fundamentals. Here's another perfect example, guys. The fundamentals, well, you could say the fundamentals, they went from cash flow rich to spending all sorts of money. So that's a drastic change. But as far as earnings are concerned, the multiples have come down in all these names quite meaningfully. Positioning too now. Again, this was the most crowded trade in these names, right? Mag 7, by far the most crowded trade because of this strong rally. The positioning has come down drastically in these names. Drastically. So we got the job done. It's not a crowded trade anymore. But they're tricky. They're tricky. Right? It's almost like that Mag 7 trade is broken up anyway now. They're all got a different wrinkle to them. But look, like Amazon's been one of the better ones, but every rally finds sellers. Right? It hasn't been a clean trade there. Google has been one of the better ones too. Google probably the best one. And then Microsoft, which probably was right up there with NVIDIA, being the most crowded name of the bunch. Look at this. All right. So again, they're just not easy trades. Within this, like even Meta, I play this when I play Meta intraday. It's not bad. FBL. $20. And if Meta moves like it does today, you can make a little bit of money in it. I didn't trade it today though. I don't know why, but I didn't trade it today. But there are possible trades within this. But again, it's just tough. Right? You can see like even in this downtrend, right? When they sell them, they bounce them. Right? This was off earnings, it looks like, and then you get a bounce, right? Selling, bounce. Again, it looks easy on the chart. It's not that easy. But these are the trades within all of that. See, like these, when I look at this, and again, I'm not saying this is the way anybody should do it. I'm just saying where I'm at. When I see this, like for me, it's either, okay, am I seeing action that impresses me enough to start to buy this name with time and take advantage of weakness, right? So look to accumulate a position into any weakness with time. That's the first thing I look at when I see this type of activity, this type of price action. The other thing, if that's not the case, it's intraday for me. Like I don't want to fool around in this shit. You know? There's too much risk there. I gotta, I'm buying here. I gotta worry about the rest of the market. What's the rest of the market look like? Am I too early? Do I gotta stay looser on my stops? Why is it not bouncing? Is there enough flow for a bounce? You're seeing call buying one day, then the next day you're seeing put sweepers. Now what do? That's not my cup of tea. That's not my cup of tea. All right. So when I see that, it's intraday for me. If I can't make much money trading in intraday, so what? I'm not, no harm done. But that's the way I kind of go about it. Otherwise, big picture, I'm looking for the entry. Right. So again, if Meta was catching clean cut action and they're bombing, let's say 9 months out, a year out, and some institutions coming in hot and heavy, accumulating a position, then I might have an interest to buy some Meta with time and take advantage of the weakness to add to that position. But that's kind of how I look at it. Otherwise, these trading within this is really difficult. At least for me, it's really difficult. And we're not seeing that type of flow. We're just not. What do we see in Meta? Like today, it's got momentum, or even I think it started up yesterday, right? I think it started up yesterday, believe it or not, the flow, and it was down this morning. But there was some buying in Meta. And then, you see some more buying, but it's all mostly in rentals, right? Even NVIDIA yesterday, 0 DTE calls, weekly calls. That's where, players just looking to take advantage of the momentum. That's all they're not betting on the name. They're betting on the momentum where they're playing off a headline. Algos could be sweeping it off a headline a lot of times. So that's the type of flow we're seeing. Yeah, no, I'm not saying intraday is easy. First of all, I think intraday trading is difficult to begin with. It's just the problem with intraday trading is that it's almost like the greed in us. We want to make decent money, instead of just nickel and diming. That's basically day trading. The reason you're looking to day trade is because you can control your risk a lot more efficiently. And, you're just looking to get in between moves to make a little bit of money. Now, that's not how everybody approaches it, right? A lot of people get in a day trade and they're looking for a big move every time. But it can be really frustrating because that doesn't happen often. Like for me, even intraday, when I catch a big move, a lot of times I just got lucky. Honest to God truth. I just got lucky. The sweeper activity comes in at a picture perfect spot. I'll get in like an SBL, right? And I'll have a stop in mind where if it doesn't go in the right direction, I yank it, but it just melts up, right? More sweepers follow. Maybe he catches news and keeps going. And I didn't even get a chance to sell it, right? It just keeps going higher and I got lucky. That's usually my decent intraday winners are mostly luck. I'm not going to lie about it. Mostly luck. But my goal, and again, I'm not your prototypical day trader. I look to day trade to buy myself time to get through the tougher climates, right? Sort of like appease my feeling and emotions of my degeneratism, if that's a word. If I can make some money in the interim, I feel like who's better than me? All right, I get through the tougher climate with ammo intact, and now I can take advantage of the better climate. But that's what, like, day trading for me, what I was getting at is I just look, instead of betting on the name, I'm looking to get in the middle of buying. That's my goal. So in other words, when they're sweeping Nvidia, zero DTE strikes and weeklies, right? I'm not, in my mind, I'm not saying where's Nvidia going to be by the end of the week, where Nvidia may be by the end of the day. What is that buyer looking for? What are these sweepers looking for? That doesn't even go on in my mind. In my mind is this sweeper activity that's coming in, can it generate enough volume and momentum for me to get in the middle of it and get out of it with some money? That's my goal, simply put. So the majority of my intraday trades are mostly scratches. Scratch win, scratch loss, scratch win, scratch loss. And then I'll run into a decent one here and there. And sometimes I get lucky and catch a nice one. But that's how I approach it. You know, again, the bulk of my P&L is always from a sweet spot in the market throughout a 6-month period or something like that, where, you know, you get a good 2 months where sweepers are aggressive, new names, right? Everything lines up in a sense with a tailwind. And, you know, I'm just collecting shit, and it happens to go higher because of just how risk on everything is. You know, this is not that climate, all right? This is certainly not that climate. So that's why again, my goal is basically to come in, try to scalp, make a little bit of money here and there, and mostly just follow the signals and see where they might be placing some clues and relaying it to the rest of the steam room. SATL, I know this name. That's the satellite spec name, right? Yeah. Yeah, I mean, you know, again, these, don't get me wrong, it's profitable too. I like to trade these. Oh no, they're losing money. I like to trade these names. Okay. So when the climate, like we're talking about, when the backdrop is bullish, when the environment is risk on, and I'm just looking to buy anything that's getting aggressively swept, this stuff I do well with. You know, because what happens is there's sweeper activity that comes in aggressively, let's say here, right? And I don't even need to buy the calls. I'm buying equity at $4 or $5, and the momentum is so strong that I'm selling somewhere here, right? But right now, the environment we're in right now, these type of names are tough. They're tough. You know, they're out of favor. Yeah, right. Again, and even recently, this caught a bid because of the SpaceX IPO. So we weren't even really in a climate for this name to do well. It was the SpaceX IPO that they were chasing all these satellite names for. You know, these small speculative names really haven't been in favor for a bit now. It's been, and this has been the market for, you know, quality, profitable names. And you have the chip space and some of these AI build out names that you got crazy growth in these big profitable companies. And that's where all the momentum has been. You know, these smaller names with, you know, no earnings, no revenue, it's been tough sledding. Tough sledding. You know, and these names usually, when you see like Bitcoin, the way it's acting, right? Like usually Bitcoin is faring better than it has been recently when those type of names are in vogue. A lot of the speculative stuff have been out of favor. Out of favor. I think the picture perfect type name for me here, right? Like if you would ask me a question, if I put a gun to your head and you had to buy something, what would you buy in this climate? It would be names like this, but that may still be at half decent entries. You understand? And again, that doesn't really exist. But that's kind of, there were a few left out there. If you remember, we were talking about like this, right? Remember, like this is the name I played. I got out of it now. But you had, these kind of underbelly names that were profitable with growth in the hot areas that really, at the time it was around here, I think, right? Really didn't go anywhere too far yet. So this would be the area, again, if you asked me, of the sweet spot that may still work out in this market. This would be the area. Now, we run into correction, these things are going to get smoked just like everything else, right? Because you go from low correlation to high correlation and everything gets hit with the indexes. But what were the other recent names? You guys remember a couple of them I played. A few of you played them with me. I forget the symbols. Why I forget them so easily? FPB? No. GTX, thank you. That was the one I can never think of. Right? You guys remember we were talking on the webinar here with this name? Even this name was up a bit, but not as much as the others. But, just crazy growth, right? Crazy growth. So like an undiscovered name, possibly not as crowded as some of the more well-known names, and still you have that sexy growth. So if you happen to find these, with or without flow, I need to see flow there to pick up on them. But if you find a few on your own, this is still a sweet spot, in my opinion, unless we run into a correction. But, you're not likely to find too many right now because the street has discovered all of them. There was another one, FPS, that I make. Oh, yeah. Oh, man. So this came down. This is one I owned with GTX and MITK. I think this, dollar-wise, this is the one I made the most money with. But it's right back down to kind of, I think, where I bought it. Right? Yeah. This thing got up to 65. Geez, goodness gracious. Again, profitability, crazy growth. And, this is even a recent IPO, so it was kind of undiscovered. So this is like my bread and butter, these type of names. It's not, they don't have to be $4 or $5 a share. I like trading those names, but, I'm trading them. When you get underbelly names that are just not well known and have the sexy growth with profitability, they're just undiscovered. That's where I fare best. Did I get into which one, Girl Trader? Which one are you talking about? Paying for me was valuation over price. We had a 55 bid over 2 months ago. Yeah, no, this thing, man. I know a lot of people in the Steam room were bullish on this PENG. This was a good-looking stock. Definitely. Quite the move, too. But GTX. Yeah, I bought this. And what was your question, by the way? Did you get into that one? Because, no. Girl Trader, one thing I don't know if you're aware of, another thing to a fault that I do is if it doesn't catch sweeper activity, I don't play it. Like everything I own is all sweeper activity. That's my idea generator. All the stuff we look at and talk about on this webinar, kind of the backdrop stuff, is more of risk and timing and all that stuff. Sweeper activity is just my idea flow. So unless it's getting swept, I'm not buying it. And GTX, what happened was it caught really good looking sweeper activity. And I wasn't even the spot I wasn't crazy about because here the circle's there. So this was a bit extended for what I like. Like I usually don't chase this, but if you guys who remember, you were on the webinar with me when we bought it. We were talking about it and we were looking at the numbers, and I was like, I have to buy this, even if I lose my money. Like I looked at these numbers with that sweeper activity, I had to buy it. So it was good looking sweepers, but this gave me the push to even chase it when I usually wouldn't chase it. That's awesome to hear, Girl Trader. And because sometimes it could be to a fault, right? I don't want you guys to think I throw too much shit at you, because again, I look at a lot of stuff, but there's stuff that's actionable and more important, and there's stuff that's just background, So I think, Girl Trader, each and every one of us were different. It's about finding the things that mean most to you for your style, right? And your risk, and being able to put that all together. It takes a little bit of time, trial and error, but eventually the goal is, and you should get to the point where, okay, I think I got something here to kind of build off of. You have a plan, right? Because I think that's the part of the game where you get into trouble. If you come in slinging every day with no plan, you may go on a nice run and make some money, but it's only a matter of time, right? It's only a matter of time before the market gets you. So you gotta have something. You gotta have something. You gotta have something that puts the seatbelt on when you need it to go on, and then what gets the nudge to get you aggressive when you may not be in the mood to be aggressive. And trust me, I'm telling you, and I've been looking at this stuff a long time now. Especially the stuff we look at, it's not easy to get bullish and aggressive when the stuff is telling us to get bullish and aggressive, because most people are doing the opposite in that time. All right. When you're coming off the Liberation Day lows and everyone's panicking over tariffs and everyone's net short and has puked up all their long exposure, all that noise is around you and it gets in your head. It's not easy to try to get aggressive, let alone bullish, but that's where this stuff kind of comes in handy. It smacks you in the face, Well, what you just said, Girl Trader, I think is the most important thing. It sounds corny, but to me, it's the most important thing. You're going to realize this, I think, one way or another. Everybody does. That where you make most of your money is going to be in certain climate when things line up a certain way. It may not be the way I like it to line up. It may not be the way Sahil likes it to line up. It may not be the way anybody else likes it to line up. But for what you like and feel most comfortable and confident with, right? Things line up a certain way, and that's where you're most effective, and that's what you need to figure out, right? And then it's the ability to hang around for that time to show up, right? Kind of grind it out in the interim while waiting for that time to show up, and then kind of lay down the hammer. That's what it all comes down to. Again, at least for me, that was kind of the glaring light when I would get frustrated, is that I knew when certain things align, I knew I could make money in this game. So I had to figure out a way to kind of avoid everything else beating me up so bad, so I can get aggressive when I need to get aggressive. Yeah. And again, you could trade every day, but it can't be meaningful. You can't trade the same way every day, right? So Like you could come in and play, right? Keep a tight stop and do whatever. But you can't just come in every day thinking, every day's the same and swing for the fences. It's a losing proposition. Exactly. Exactly. But yeah, it's the sweet spot, right? I think again, I'm a big baseball fan, as many of you know, right? The baseball analogy works so well. Right? It's like sitting there, you're a fastball hitter, dead fastball hitter. You swing at the breaking ball stuff, you know what's gonna happen, right? You foul a couple off, you break your bat, you hit a little dribbler down the third base line. You gotta sit and wait for that pitch, make that pitcher throw your pitch, and when it comes, you're ready and swing that bat, right? And that's that's basically what it is. Again, easier said than done because there's a lot of emotion in this game, but that's the goal. The closer you come to that, the better off you'll be. The better off we'll all be. Right, and that's the thing. Like that, and you guys know my story. Like that was the problem for me, is that getting caught up in all the mess and then not having the ammo to fire when it was the best time for me to fire. Then listen, you do that enough. Some of you're young. I get sick even talking to you guys. You guys are young in this game. Even a few years into the game, you guys are young. Eventually you're going to get to that point. By hook or by crook, you're going to get there. You're going to realize like something. It's just not worth it, right? It's just not worth it. You get annoyed and frustrated, burning paper, burning your money when you shouldn't be. That's what ends up building your patience. Like when people ask players who have been in the game a long time, like myself, wow, how are you so patient? That's how you get patient. You get sick and tired of losing money when you shouldn't lose money. Like you get to a point where you're going to lose your money, Like, and if you still continue to do it when you know you're going to lose your money, well, you're a pure breed degenerate. There's not much help. Hey, T, I was just talking about you on the Bros trade. You had a nice trade there. I just mentioned you about 5 minutes ago. But yeah, guys, that's yeah. Again, it all sounds corny, but yeah, the name of the game. You stick around long enough in this game, you learn enough of the stuff you shouldn't be doing and the stuff you need to do. You continue to work at it. Eventually, you continue to improve. You got to hang around long enough, though. If you continue to do the things you shouldn't be doing, you either burn through your money or you get too frustrated and you knock yourself out of the game. That's what happens to most people. They're just not around long enough to get over that hump. Back in the day when you started before focusing on sweeper activity, oh man, I used to, well, again, I used to fool around with a lot of different stuff. When I got into the game, like everything was exciting to me. Like I got into the game, you got to understand when I got into the game, you guys have the world by the balls here. Like when I got into the game, like I remember like Elliott Waves was a big thing. I never got into it, but there were a couple guys on my desk who were diehard. And, retail and your casual trader investor didn't have access to any of that stuff. So you had a legitimate edge in this type of stuff. But there were all sorts of things. My big thing where I started to do well was basically kind of the IBD formula. You guys know it's still around, like the IBD trader. I think the system is still the same too, right? Was it Can Slim? Like that was my thing. So I used to any high rating in the name, like you get 90s. Back then, it used to have two ratings, a technical rating and a fundamental rating. So any stock that had like kind of high ratings and was starting to break out, that's what I would buy. And in some of those bull markets in the 90s, that's all you needed. That's all you needed. Because like every quality tech name always used to pop on that. I used to get that paper. It used to be a daily paper. I was diehard IBD. My license plate, when I first made my first batch of money, I bought a truck Escalade, the big Escalade. Back then, well, I don't know. What is this? Is that pre-2000? I think, or maybe a little after 2000. Anyway, my plate was 99.99 AAA, AAA. That was my license plate. That was my license plate. That's how big I was into it. So again, the options game was not, now forget it. It's like night and day. There, and then what happened was once options started to get popular, Nigerian really got big into it. The unusual activity was like printing money. There was so insider trading like crazy. So all you needed to do, any unusual trade that popped up on a scan, you just buy it and you would print. But again, the 90s was the go-go days. You know what I mean? It was the go-go days. So then that's when I started to get into flow from that point, like unusual activity type of things. Also, insiders, I used to follow a lot. Insider buying, mostly not selling. When there was insider buying in a name that looked interesting, I used to build a position for clients. Because for clients, you couldn't be as nimble. You had to build positions for clients. That was basically what you had to do. But once I got into the flow and started to find success there, that's when I left the game and traded my own account. It wasn't worth trading client money anymore. But that was after like 2008 and all that shit went down. And you got to understand, from someone who used to trade like client money to trading your personal account, it was like a breath of fresh air. It was like, wait, I can get out of a stock and I don't have to explain to anybody why. I don't have to concoct some story of why I have to pull the plug just because something doesn't look good here. You're not forced to do anything. That's the beauty, like a lot of retail traders don't realize with their own account. You don't have to tell anybody what you do, right? Yeah, there's no performance that you have to live up to. There's no nothing. Sometimes that's the negative of a chat room, right? You're seeing what others do. You're telling others what you're doing, right? So you'd be like, I'm buying bros, and you're telling everybody in the room. And now, something you see, credit spreads start to crack or something like that. You don't want to take a loss on bros because you told everybody you're bullish bros for all these reasons, and then you're forcing yourself to stay in it, right? Or you think you have a reputation to live up to in a chat room, like, these people are going to look up to me because I told them a stock that went higher. But that's all bullshit, meaningless. Like, that's not the main objective of why you're trading, right? So if that stuff gets in the way, you got to learn to, it's okay to share ideas, but if it affects what you're doing, obviously you got to make some changes. But you know what I'm saying, Madden, right? You see people come and go even in the steam room. They come in with their pounding their chest. Listen, this market, I don't care what anybody says. It's bearish. If it breaks this level, breaks VWAP this, breaks that, it's going down big, and blah, 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 right? And then you never see them again while the market's ripping high. Meanwhile, in the steam room, and again, I'm not saying you guys know I love all you guys who are vocal, and would have no one to talk to if you weren't vocal. But let me tell you, there is quite a few quiet, silent, but deadly killers in the steam room you don't even know exist that are running big books, running big money, and killing it, and you don't even know they're there. You don't even know they're there. Again, I'm not saying it's bad to be vocal, share ideas. That's the beauty of a room, right? Is to share ideas. That's the best part of it. I'm just saying, if you're the type that it affects psychologically, emotionally, you got to do what you got to do, right? You got to worry about yourself first. Yeah, well, that's the thing too, right? And that's what I'm saying, it could be very misleading. Let me tell you something. When I was, and again, this is not arrogance, this is nothing to brag about, okay? If anything, it's the opposite. But if I was in the steam room when I was moving around client money, you know what I mean? I could share stories you would think I was King Tut, right? How aggressive I am, how much I'm buying, how big of a gain or loss I'm taking. But you're right. It's not my money. It's a lot easier to be a tough guy with other people's money, right? Yeah, it's again, there's good and bad. I'm not just saying it because of the steam room, obviously. But I'm being honest. There's positive and negative of kind of these chat rooms and these gatherings, right? The good is the idea flow, the news sharing. Like, without some of you guys, I wouldn't know 3/4 of what these companies do, right? I would have no clue. Like Nokia, when it was catching flow, I still thought it was an ADR making cell phones, right? So without you guys, I don't have a clue about any of this technology stuff. So that's obviously the good. The bad part is when people get a little outlandish about, what they're buying, what they're making, what this, what that. And they probably mean well, most of them. Some of them don't, but those people come and go. But it can affect with people's psychology. You just got to learn to control that stuff. Yeah, again, I'd be lost without hearing from you. I don't know what the hell I would do. I'd be lost, honestly. Especially these days with AI. You guys know me. I'm lucky I could turn my computer on. I'm lucky I could turn the computer on every day without a hiccup. Right. T, that's a classic. Yeti, okay? Yeti was catching flow. I own the stock, right? It's going higher. And like I'm telling people and just assumed that my Yeti microphone was what they do. Okay? And until I mentioned it to you, to the people in the steam room, and they were like, it's not your Yeti microphone, you nut job. I would still would, like T said, I still would think Yeti was my microphone. T, that's classic. Oh, that was perfect. That's the perfect point right there. What I was getting at. Oh my God. It's sad. I don't know how I should be embarrassed by that, but what are you going to do? Yeah, I get it, Wolf. Trust me, I get it. I get it. I get it. Like, listen, for me, again, just it's because I've been in the game long enough, like, nobody is going to talk me into or convince me into buying anything, Like, I'm so in the mode of doing what I do. Like, it's not. The only things like that come in and out that I digest is stuff I wouldn't know about, like T's point, right? Buying a stock, it's catch and flow, and just not knowing. So you could say it doesn't matter what they do, but just thinking it's the maker of my microphone and it's quite the opposite. I mean, that's a perfect example. Oh, that's classic. All right, everybody. I'll let you to your Thursday evening. Another week in the books. We're heading into the dog days of the summer here. But again, it's pretty obvious what the risks are. Some of the main risk out there. We go into earnings season, which is going to be interesting and get interesting rather quickly, probably within the next week or two. Again, we'll just review and go over each and every day, each and every week, the evidence at hand and see how they lay them out. Yep, AB as well. See you, everybody. T, Wolf, have a great night. Thanks for spending some time on your Thursday afternoon after the close. And Steam Room members, I'll see you mañana. The rest of you, I'll see you next week. Have a good night, everybody.